Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of Ulta Beauty Incorporated, ticker symbol ULTA. Let's start with a brief overview. Ulta is a company operating in the beauty industry, and as of the 26th of August 2024, its stock price stands at $378 and it has a market cap of 18 billion. Moving on to some key valuation metrics, the price to earnings ratio is 14.7, while its price to cash flow ratio is 13.5. Now, let's take a closer look at the company's growth over the past 5 years. You can see that its revenue has grown by 51.4%, while its bottom line has increased by 82.8%. In terms of earnings per share, there has been a growth of 114.4%. However, it's also important to note the change in the number of common shares outstanding, which stands at 48.8 million, reflecting a 15.8% drop. Additionally, the interest coverage ratio is 95, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet. Starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 0.54. Looking at the long-term debt to equity ratio, we find it at 0.7, and the overall debt to equity ratio at 1.44. Now let's transition to the cash flow statement. Cash from operations is 1.47 billion, reflecting a change over the past 5 years of 34%. Meanwhile, cash from investing activities is minus 441 million, showing a change of minus 6.3%. Furthermore, cash from financing activities is minus 1 billion, showing a change of 5.4% over the same period. And lastly, free cash flow has grown by 34% during the same time from 1.1 billion to 1.47 billion. And it's projected to grow to 1.75 billion in fiscal year 2026. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The ROE is 113%, the ROI is 42%, then the ROA is 23.3%. Most importantly, of course, the ROIC stands at 31.4%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 12% for 10 years, and a perpetuity growth rate of 3.5%, we get a fair value of $446.6. Uh, Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $605.49. And thirdly, the analyst price target is $448.88. Putting it all together, we get an intrinsic value of $495.62. And using a 15% margin of safety, we get an acceptable buy price of $421.28, suggesting that the stock at the current levels is undervalued. To wrap up my analysis, I would rate Ulta as a buy. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis.